Hello and welcome to today's first time home buyer workshop. We're going to give it a few minutes just to let everyone chime in. I know everyone is logging in from work. Thank you guys for being here this Wednesday afternoon. We're going to get started in a few minutes. We have a lot of great information to cover today. I'm excited to share some updates as well, where the market's going. We're going to talk a little bit about down payment assistance program as well. So it would be just a minute before we get started. So thank you guys for joining us. I'm going to be typing in all my information in the chat. If you guys have any questions, please feel free to chime in. We're going to do our best to answer everyone's questions. You can also send us a private message if you like for anything that we didn't cover that you would like to discuss as well. So we'll give a few minutes to let everyone chime in. Okay, so thank you for logging in today. If you also, if you like to let us know where you got our information, where'd you hear from us, or you're in a database, did a friend invite you, did you find us online? It would be great. You can share that information with us. It's always good for us to know, follow, and keep track of how you hear about our first-time buyer seminars. Today's webinar, it's going to be about 45 minutes. We're going to try to get through, depending on the amount of questions that we have, we'll try to get through it as soon as possible. But if you have any questions, feel free to please chime in. This is when the opportunity that you have to ask any questions pertaining to anything that we present or anything perhaps that you want to run a scenario with us. This is when we can answer all those questions for you. All right, well, we're going to get started and we'll let people chime in as they come in. So thank you guys for joining us today. We're going to be providing you with a lot of great information and up-to-date programs and scenarios that we've been working with our clients. I've been in the industry for 20 plus years now with American Pacific Mortgage. Our branch is here located in Downey. We serve all of California from Northern to Southern California, but primarily our area that we are servicing, it's LA County, all the way to Central of California. We are working with CalHFA very closely to provide a lot of down payment assistance programs. So many of you have previously worked with us. You guys have seen our workshops that we host, not just online, but also in person. I'm also a Freddie Mac credit facilitator. What that means is I'm able to educate families on how to budget and how to go through the process of buying a home, not just in loan programs, but just the overall budgeting. And if you are interested in joining one of our classes, feel free to send us an email and we can help you enroll in our next course that starts later this month. And that one will cover everything you need to know, not just about buying a home, but also budgeting for your finances as well. We specialize on first-time buyer programs. That's really what our passion is. We've helped many homeowners get into homes in the last couple of years. A lot of people have acquired home with down payment assistance programs up to 20% that were provided by the state of California. So we follow all the trends. We're always up to date with a lot of the programs and grants that are available in California. So we can help you search and navigate through those products. We also have a big support team that has about 20 plus years in experience here locally in our office. We do work with our Sacramento office for all our underwriting needs, but locally we have our processing and our assistant team here at our office that if you like to walk in, they're here to help you and assist you through the loan process as well. So today's agenda, we're going to cover a lot of great content. So just kind of an overview on the market update. We're going to dive in to see where the market is today, how our sales are doing, what interest rates look like, and what we forecast in the future. Again, I am not an economist, but we do have some great data that's going to give us some guidance in some direction where interest rates are going. We're also going to talk a little bit about, does buying make sense? That's a big question that a lot of my clients are always asking me. They're saying, should I hold off on buying? Should I buy now? Should I wait for 2026? What do you think, Luz? Should we take a leap of faith and start buying a home today? So that's a really big question, and we'll cover that as well today. We'll talk a little bit about credit building, the importance of credit when you're getting pre-approved for a home loan, different types of loan programs available for you and your family. Also, what does it take for you to qualify for a home loan? We'll tap a little bit. Today, we're going to highlight CalHFA on our first-time home buyer program. So we'll talk a little bit about the eligibility for that program and what is the new program that they just launched a couple of weeks ago as well. We'll go into the loan process. It's always really important for you as a first-time buyer to understand the loan process. I feel that every time someone joins our workshops, the process of the transaction is so much smoother. A lot of the questions get answered during these workshops. And then afterwards, what happens is that the loan process is really smooth. They know the information that they receive. They're also, it's just so much smoother for them when they're qualifying for that. And then we'll book your appointment. What happens next? What if once you learn about all this information, we'll give you the resources how to book your next appointment. Okay, I think someone raised their hand. I'm not sure if someone had a question. Okay. All right, so we'll go ahead and continue. But if you feel free, please put any questions on the chat. If for some reason it's not letting you, please let me know. We'll go ahead and enable that function. Okay, thank you. All right, let's talk a little bit about the housing market. What are the average homes of prices in Southern California? As many of you have seen, the prices continue to go up year after year. If you see this information, they had some, lower levels in 2023. It kind of stopped a little bit, and then the growth continues to be in 2024 along with 2025. Now, when you see the arrow going down a little bit, doesn't mean the market is dropping. That just means that there's probably a little bit more inventory. With the change of administration, we had, some uncertainty of where the market's going to go. Is it going to drop? Is the price going to go up? Well, California, especially LA County, is a high and very desirable area to live. Regardless of what the market indicates, there's still a high demand of housing. And we'll talk a little bit about the prices of homes and affordability, right? There's the thing about why prices of homes continue to go up and people can't afford the homes. There's always going to be a market for different areas. There's always going to be different type of homes in different areas that will continue to sell regardless of the market conditions. But California, it's a hot market. We'll see some adjustments based on inflation, that prices of homes might, slightly be a little bit lower, just so it's more attractive to the consumer. However, we do see and we do forecast that appreciation still continues to be on a steady flow in Southern and California in general. Southern California, especially LA, it's thriving, with the Olympics coming in here, the World Cup around the corner. We feel that Los Angeles will be a more to-go and attractive destination for a lot of people that are coming outside of the country, but also out different states. So it's just a little recap on where the market is going. Of course, different areas have different average of home prices. So if there's a specific area in California or other state that you like for me to look into, in the consultation, we can review that together. Mortgage rates to date. So this is up to date from Freddie Mac. They're forecasting what the average rate is nationwide. If you want something to see locally, you can always visit their webpage. This is like up-to-date data where the information we're gathering. So just to kind of show you a little bit, we'll go back to where rates are forecasting to be. So currently right now, interest rates are averaging about 6.65%. Any given day, we're anywhere from 6.5 to 6.7. And we'll talk a little bit about what determines an interest rate on your particular situation. So this is where you're going to see where the market's at. So let me just show you a little sample here. Last year in April, rates were higher, right? So we're really low. Obviously, we're going to see this benchmark here that it was a lot lower last year in September and October, but a year ago, interest rates in 2024 were averaging about 7.25%. So a year later, we have improved our interest rates. So interest rates are slowly dropping. Now, are we going to get to the 3% or 3.25%? I hope not, because when that happened, it was due to a pandemic, which was a something that, globally the economy suffered from. So unless something happens like this globally, then we're not going to be seeing any 3% rates in the future. But we are seeing that momentum where interest rates are dropping. This presentation is going to be emailed to you, to everyone that attended. So you will have this on your desktop that you can look daily. So here we are last year at 7.25%. We did have an opportunity here somewhere last year in September that a lot of people took an opportunity to refinance. The rates did drop below 6.25%. I know we had the opportunity to secure some 5.7% rates for our clients. So you can see that. And then slowly, based on inflation, rates started to crawl up. And now we're starting to see that movement where rates are starting to adjust and drop a little bit, right? So here's 6.6 where we were at last week. Today, the tariffs are taking in place. We don't know what that's going to look like with the bond market tomorrow. We're going to wait to see for a couple of days if we're going to see better rate improvement. But one of the things the Feds did talk about is that they're not raising rates, so that's a good sign. But we might see lower rates towards the end of the year, right? Does that mean you wait towards the end of the year to buy? Absolutely not, because when you wait, you're going to pay a higher price for that home. And remember, interest rates, it's a 30-year fix, but when rates drop, you have an opportunity to refinance and lower that interest rate. So this is a great chart for you to see where the market has been. Of course, our job is to watch the market for you and to lock the day that the rates are the best. Okay, so that's our job, how we guide you when it comes to interest rates. So I wanted to share a little bit about that so you can get an idea what rates are like today, where you can get the information, and we'll talk a little bit what impacts the interest rate, why your friends are quoted something different than you are, okay? So interest rates vary depending on the loan program. It varies on the down payment amount, the loan terms, whether it's a fixed or an adjustable rate. Credit score also impacts the rate that you receive. And sometimes people are buying down interest rates. Therefore, you're starting to hear, oh, I received a 5.7. I have a 6% rate. That means they probably purchased points to buy down the interest rate. So those are some factors we have to look at when you're receiving a quote from a bank. What is the reason why you're receiving the interest rates? You should always ask the question, why am I getting quoted this? Is there another program that has better rates? Our goal is to guide you, to provide to you the resources and the information you need to always put you at the best loan program available out there for you. So here's an example of what interest rate does and what buy down means. Lately, I hear a lot of my clients calling me, say, Luz, what if I buy down the interest rate? Can I buy down the rate and receive a lower interest rate than 6.6? The answer is yes, you absolutely have every right to look at options. We're not recommending anyone to buy points, only because if the market continues to improve, what you pay us upfront, those fees, you will lose the moment you refinance. So to recover the cost of every half a point you purchase towards the buying down the rate, you're estimating on this loan, we're estimating about $3,200 in cost for fees. It's going to save you anywhere from $70 to $80 on your monthly payment. It can take you up to 3 to 4 years to make up that cost. And if you're refinancing in 6 months or in a year from today, then that fee that you just paid the bank, it's going to waste, right? So what I recommend my clients is keep your fee, right? Unless it makes a big significant impact on your mortgage, keep the fee and just pay it towards your principal. So when you do refinance, you owe less to the bank. The new interest rate will get amortized better because now you owe less of the principal balance. So again, it's case to case. If you definitely need to buy down the rate, we will give you those options, and we'll also let you know how long it will take you for you to make up that fee that you're paying the bank. Okay. And if you have any questions on that, please, please put it in the chat. We're here to answer any questions for you. So let's talk a little bit about the advantages of buying versus renting, and it makes sense. Absolutely. Again, it's not for everyone. If you know you're moving and relocating out of the country in the next 24 months, perhaps buying doesn't make sense to you. But if you're looking for stability and a long-term property, then yes, absolutely buying makes sense. It's all going to depend on your financial situation, but let's talk a little bit about the benefits of buying. Property taxes, mortgage insurances are fully 100% tax deductible. So if you're currently in a tax bracket that you're paying high taxes, this may benefit you. Talk to your CPA, your accountant to see, calculated mortgage interest, what the benefit would be if you acquire a home. Okay. Buying a property, you also are earning equity. When you're renting and you're paying somebody else's home off, you're paying somebody else's, you're making somebody else gain that equity, not you. Okay. So the properties appreciate. There's times that the market, it's not moving fast enough, but overall, if you stay in your home, if you've been renting for 7+ years, you're going to own a home for 7+ years, you're going to start dropping your balance, you're going to start earning equity. Okay, so that equity in the future, I've seen many of my clients use it for refinancing, for debt consolidation. They've refinanced to buy their second investment homes. They've refinanced their properties to pay their kids' college funds. So there are so many great benefits to buying versus renting. Okay. Also, too, if you rent, you don't control the improvements in the home, right? A lot of times your landlord doesn't want you to do any kind of remodeling, any kind of adjustments to the property. Owning your home, you can make these adjustments. In the future, you can always participate in a renovation mortgage that allows you to renovate your home with your own equity, which is, we can talk a little bit about, I host seminars on 203K renovation mortgages every 6 weeks. I also have the renovation workshop on demand on my website. So if you're interested in a renovation mortgage, you can look into that webinar. So improvements are important for everyone, right? The house deteriorates, you need to improve your house. The landlord's not doing it to your home, you can do it. I hear a lot of my clients say, I don't even want to paint the house anymore. It's not mine. I know I need a new kitchen. I want to remodel it, but it's not mine. So I'm sticking around with an old cabinets, old kitchen, right? If it's your home, you're not going to think about it twice. You're going to do the remodeling because it's yours. So that pride of being a homeowner, it's absolutely, it makes sense 100%. Renting, like this chart shows, it's not tax deductible. You're not earning any equity. You're paying off someone else's mortgage. You can't improve. You can make any improvements on the property. So does buying make sense for you? I always tell everybody it makes sense when you're financially ready. Okay. And for that, we're going to talk a little bit today on different down payment assistance programs that will help you become a homeowner a lot faster than you expect. All right, let's dive into how to qualify for a loan regarding credit. Why credit is so important when you're buying a home. FICO scores, when you're purchasing a car, you're going to have an auto loan credit. When you're pulling a credit card, you're going to have a consumer credit card credit score, which you're probably seeing on your online website. If you're on creditkarma.com, you're probably looking at the consumer credit FICO score. For mortgages, we're going to use a mortgage FICO score. So you're probably going to see a difference when we're pulling the soft pull versus what you're seeing on Credit Karma and also on your creditreport.com. So this is why we're always asking our clients, let us do a soft pull. It doesn't impact your credit. Let us look at your mortgage credit score so we can factor that in to see if you're qualified to purchase a home. And if you're not, let us guide you what you need to do to be able to qualify for one of our programs. So credit scores impact different ways, right? So payment history, it's 35% of your credit. So keeping those credit cards paid on time, it's really important. If you have had in the past an oversight on credit, you're going to start to see that impact of the FICO score. The credit will be lower as you start, rebuilding your credit again. 30% of your credit score is based on the amount that you owe. So credit usage, really important. I always recommend my clients to look at their credit report and see where their balances are at. And I encourage them to start minimizing the usage of credit. And if possible, start dropping those credit card balances to only use 30% of the credit limit that's reporting. When we run a soft pull for you, we're going to give you that recommendation. So if your credit score, it's in the, fair section, then we're going to guide you on where we can improve that credit to get you to good or better credit scores. Okay. Length of credit, it's 15%. So a lot of times people say, you know what, I've had great credit. I've had credit for 20 years, but I haven't used my credit. That doesn't mean you have great credit score. Okay. If you haven't used your credit, sometimes our clients are coming and we show no FICO score because the credit that they did have, the accounts were closed. So then there's no revolving credit. There's nothing for the bureaus to score you on. So running that soft pull again, it's going to be really important. And 20% of the credit, it's in use and new credit. So, keeping in use credit on time, new credit report, 20% is impacted. We recommend that if you have a good credit score right now and you're looking into buying a home, it's probably a good idea not to inquire for new credit cards until you find your property. So this is a little bit of a range of how we're determining credit scores. We can obtain financing with the 580 credit score if needed. 670 to 739 is going to get you, just in general, all the great programs out there. And of course, once you're 740 and above, the credit interest rates that you'll receive will vary depending on the down payment that you have on certain programs. As long as you're at 640, it doesn't matter. So here are just some basic information on credit. 580 is typically what the government with FHA loans require, 620 for conventionals, 580 for VA, 640 to 680 for CalHFA programs. So that's for our down payment assistance programs. Some credit, score factors, what determines credit's going to be, judgments, tax liens, activities on the credit in the last 12 months. Right, there's derogatory credit as well that shows up on our credit report. So we want to make sure that we're not overlooking at that. One of the things that impacts sometimes credit score are timeshares. We're starting to see timeshares default during collection that could impact your credit. Foreclosure, short sales, and bankruptcy. Those are the things that are limiting the credit scores to increase. So, we're looking at all those things in advance to make sure that we're guiding you that your credit score continues to improve. Now, when you're looking online and you're looking, what's the minimum credit score do I need to buy a home? Most of the time, you're going to be running into the 580, 620 kind of conversations. But, sometimes what happens is that you are going to run into a 500 credit score type of loan. Okay, so 500 credit scores are going to be acceptable if you have a 10% down payment. Any questions on credit? Okay. Qualifying for credit. So we're going to talk a little bit about waiting periods and what impacts your credit score. If you previously had a foreclosure, then there's a waiting period depending on the type of loan. If you had a short sale in the past, if you lost your home, there's a waiting period depending on the product. VA loans, 2 years, you can repurchase. If you filed bankruptcy, there's also a waiting period depending on the chapter that you filed. So chapter 7, it's 4 years from discharge. Chapter 13, it's 2 years, and that would be on a conventional loan. For FHA loan, there's more flexibility there. We can look at 2 years after discharge, and then case to case 1 year after the bankruptcy. And for VA loans, it's 1 year after the BK. So these are some of the big factors that's impacting credit. So if your credit has been impacted due to bankruptcies or previous foreclosures, these are the waiting periods that you would have to wait to obtain financing on these programs. So what do you need to qualify as far as income for a home loan, right? So typically it is your 2 years of employment. We prefer you to be in the same line of work. However, if you change job, that's okay. You can change different jobs in today's world. You know, everyone's trying to, they're working in different trades. So, and then also too, if you just graduated from college, that serves as your job history. So you could have graduated last semester and you could have a job the next day, and that will count for your 2-year job history. If you have a trade as well, that counts as your job history. A lot of things have changed. The 2-year job history for us, it's to see if you've had previously worked. However, if you've had a gap in your work for 6 months or 8 months, and now you're back to work and you've been at the job for more than 6 months, you are qualified for a home loan under a conventional loan. So you are eligible to purchase a property if you just started a job and you've been in the job for 6 months. Another big question that we receive is, I have a second job. You know, a lot of people have second jobs now. Can I use my income for my second job? The answer is yes, if you have been on the second job for at least 12 months, okay? If the second job has not been seasoned for 1 year, then we would have to wait for that second job to be seasoned for at least 12 months in order for us to consider the income. So again, jobs gaps are okay. You know, and it's case by case, depending how big is the gap and how long have you been at your current job position. Self-employed income, it's also acceptable. If you filed your tax returns, we would need 2 years of tax returns to look at your Schedule C. If you own a business, we would need to see your corporate tax returns along with any K-1s. If you also have a partnership, we would need to see your taxes. If you own more than 25% of the business, we need the full returns, okay? We need your business license to see if you have been in business for more than 2 years. There are some exceptions to that depending on the program. And if you don't fit in any of these categories, just keep in mind that we always have some type of alternative option for you, which we have our non-qualified mortgages that are available for a lot of self-employed clients. We have been able to fund many transactions through those programs that if you're in that scenario, please reach out to me and we'll talk a little bit about what those non-qualified mortgage means. But these are the typical items that we need when you're applying for a home loan is your W-2s or your tax returns for the last 2 years. We're going to need to see you're currently working by providing your 30 days of pay stubs, any overtime, commission, Social Security, pension, anything that you receive as a source of income, we will consider it to qualify you for a home loan. Down payment and assets, it's really important. It's a great question. A lot of people are always asking me, Luz, like, how much money do I need? Where does the money need to be? Can it be gifted? I have it in stocks. I have it in crypto. It comes in different formats. So all the funds must be able to be verifiable. Okay, down payment, closing costs, any reserves that are needed depending on the program. Reserves are not allowed to be gifted. Those have to be in your bank account. It has to be your funds. But funds are acceptable from a checking account, savings, stocks, mutual funds, IRAs, 401k, crypto. You can exchange stocks and provide us that you cashed out the value and you can use that towards your down payment. Gift funds are acceptable from a family member. 100% of the funds can be gifted. Just let us know. We'll be able to provide you a gift letter so your relative can fill it out, and we have that as a source of funds. Depending on the program, we will not need to source those gifts. On FHA loans, we would need the gift letter along with the bank statement to prove funds. We're going to need to paper trail, all the funds. So make sure that you are Have a bank that mails out your bank statements. Keep a copy of them for the last 2 months. If you receive it online, then it's easy to access those bank accounts. Large deposits, make sure that you're keeping track of all your large deposits as well. If all your large deposit comes from your payroll check, that's great. We're going to see it. But if large deposits are coming, especially you're self-employed from different activities, the underwriter may ask for copies of those deposits in order for us to prove that that money is part of your business and it's not coming from an interest of a third party to purchase the home. So that's really what we're looking for. It's to make sure that the funds in your bank account are acceptable. And if you have questions relating to funds, reach out to me just in the consultation. We will cover all that information. Let's dive into the types of loans. We're going to briefly cover this. I want to make sure that I'm respectful with everyone's time. These are just different types of loan programs that are available for first-time buyers. These are your traditional loans, which are your conventional, your FHA, your government loan with VA and USDA. We have conforming versus jumbo. And people ask me, what's the difference between a conventional conforming loan versus a jumbo loan? It's going to be your loan amount. And depending on counties and states, those loan amounts vary depending on the product. Jumbo loans are typically require a higher credit score, lower debt to income ratios, and also reserves to purchase the home. Okay. For first-time buyers, there's a variety of programs. And what qualifies you as a first-time buyer, it's that you have not owned a home for the last 3 years. Okay, that you have not. Now, if you've been on title of a home and you're not living in the property, and you can prove to us that you're renting and that you're not occupying the home that you're entitled, then you would qualify for a first-time buyer. So it's case to case. Just let me know if that's your scenario. We would definitely cover that with you. Fixed rate and adjustable rates. Adjustable rates are not popular right now, but if you would like an adjustable rate quote, we typically use our jumbo products to give adjustable rates. Our adjustable rates are not offered with our first-time home buyer down payment assistance programs, okay? Buy downs are offered with some of our down payment assistance programs, so we can look into that as well for you. So this is just a variation of different programs. Which one is the right program for you? We'll guide you through that depending on your credit score, depending on your the type of credit, down payment you have, which program you're going to participate. We will guide you to see which program benefits you the best. Big question is, what is included in my mortgage payment? Okay, when you're online and you're searching for payments, we've noticed that all the online platforms like Zillow or Redfin are not estimating mortgage insurance premium on the payments. And when we're quoting you, when we're sending you an estimate, your payment looks completely different than that mortgage calculator online. It is very likely that they're not including a PMI. And it's also very likely that they're estimating a monthly payment with a 20% down. Okay, so we want to make sure that when we send you a quote that you're taking into consideration that if you don't invest 20% in your loan, then you're going to have a PMI. But typically in your mortgage payment, you're paying for principal and interest, which is the loan amount that you borrow and the interest on the loan. Property taxes. Taxes are varied by county. Most of LA County, it's 1.25%. But if you're in a new construction area, that percentage of taxes may be higher. So it's really important for you to ask your realtor, what is my tax rate in this county? Are there any special assessment taxes that I should be aware of? Because keep in mind, when we issue pre-approval, we give you an estimate, we're basing that all the taxes in every county are 1.25%. Some pockets in different areas may have a higher tax rate. So you want to ask that question. Insurance, as you know, California, it's been impacted very highly due to home insurances. So home insurances, depending on the area, you need to, start already getting quotes to make sure that when we're, quoting you on the monthly payment, that the insurance is estimated correctly. We are seeing home insurances being insured by different carriers. California Fair Plan is a really popular one. But just know that home insurance is something that we're recommending homeowners to start searching for at the beginning. Okay, so this is what's included in your monthly payment when you're giving the bank 20% down payment. When you are not giving the bank 20% down payment and you're only putting in the minimum of 3%, all loans have a PMI. Okay. So what is a PMI? A PMI is a private mortgage insurance that is required on all loans, all conventional and all FHA loans. When you don't have more than 20% down payment, it is required by the bank to give you a quote on that mortgage insurance premium. And that quote is going to vary depending on different scenarios. Just down here, just to give you an idea, it depends on if you have a higher credit score, lower the PMI. So, sometimes your monthly pay, you can have the same scenario as another family member, but if your credit score, it's a little bit lower, then your PMI can be higher, okay? A higher down payment equals a lower PMI. So the more you give us, the lower the PMI. Now, the mortgage insurance premium that's being quoted out there online, it's typically more expensive than what we're quoting internally because we have different insurance companies that we are going to see which one gives us the best quote. When you're online and using the calculators, they're giving you a generic PMI factor, okay? Higher debt to income ratio also increases the PMI. Have two people on the loan, it actually provides us a better quote. If it's only one person obtaining the loan, then the PMI is also higher. So there's a lot of factors how these PMIs work. That's why we encourage for everyone, if you have your 3%, if you have your 5% down payment, and you can participate in a down payment assistance program, it really helps you to layer those programs because now you're lowering your loan amount, you're lowering your loan to value, now you're improving your PMI, and ultimately your mortgage payment, it's going to improve. So those are some of the great things that we look into when we're quoting you is the advantages of, different down payment assistance program that's going to put you in a better situation for that PMI factor. Unconventional loans, just so you know, once you don't have to refinance to remove the PMI. The PMI, you have to, it would automatically go away after the initial loan principal drops 78% or below. You do have to retain on the property for at least 2 years before the bank can remove that PMI. So if you have, if you win the lotto and you have an extra 20% you want to put into the loan, automatically after 2 years, the loan balances drops below 78%. You can call the bank and they will remove the PMI for you. Okay, if you want a little bit more information now, you can just go online and you can Google companies like MGIC, Radiant. We can share that information with you. They have great calculators of what that PMI factor can look like. All right, so let's talk a little bit about down payment assistance programs. We focus on down payment assistance programs all over California, and there's a lot of great products out there for you. Platinum program, it's a grant program that's underutilized for units. It's a great scenarios for many of our clients that are interested in buying a duplex. And why I bring this program up, again, I think they're going to be, we're soon going to be announcing a new grant that they're going to be able to provide to first-time buyers. In combination, you could add on any other grant programs and layer it with this one. So, the more money that you can have access to, the better position you're going to be in, not just qualifying for a higher price, but also buying your home with a low monthly payment. But Platinum is one of them. It's a grant, so that means it's free money. There's no repayment on that grant. There are some qualifications for that. Credit score, it's very flexible as well. It allows you to buy a duplex. So that's really the big win from the Platinum program. But today we want to highlight CalHFA programs because I want to talk a little bit about the program that they just launched a couple of weeks ago that it's really carrying the weight right now for a lot of first-time buyers. Our CalHFA programs are Cal Plus with My Access. They can be used for an FHA or conventional loan. The second loan does not accrue any interest, okay? It is a loan, so it's not a grant, okay? You repay it back when you sell the home or you refinance the mortgage. There's a 1% simple interest that you are going to pay back for the money that you borrow. Okay, it is for first-time buyers only. Again, what is that first-time buyer qualification? Is that you have not owned a home in the last 3 years. So let's talk a little bit about CalHFA today, down payment assistance programs, what the eligibility is. 640 credit score, it's the minimum credit that we're looking at for FHA loans. Conventional loans is 680. If you have a 700 credit score, we can go up to 50% of the debt to income ratio. The income limits are very, very favorable in comparison to other programs. A lot of down payment assistance programs, they go by the area median income. In LA County, some of them could be about $89,000. Some programs allow you to make up to $120,000 a year, but CalHFA's limits are a lot higher than most of the programs. So a lot of people could qualify for CalHFA programs, okay? You're allowed to buy a single family, condo, townhome, or manufactured home with the CalHFA program. So we utilize it a lot. It has given a lot of my clients the opportunity to buy a home. And, I don't want to really cover too much of it, but as you probably heard in the past couple of years, CalHFA had the Dream for All program, which allowed a lot of first-time buyers to obtain a home with the 20% down payment assistance, right? A lot of people are still calling me, asking me, Luz, are there going to be new funds? As of now, we have not heard of any additional funding by CalHFA, but they did launch their My Access program, which is a bond program that it's going to allow you to get an additional funding towards your down payment or closing costs. So right now, CalHFA on their conventional loan gives you 3%. Under an FHA loan, they give you a 3.5%. And with the new My Access program, you could get an additional 2.5% to add on to your 3%. And if you have your own money, you add another 3%. And before you know it, you have a 10% down payment versus a 3% minimum. And believe me, that 10% makes such a big difference in your monthly payment, right? We just covered the PMI factor will be a lot lower. So that's going to improve your monthly payment. Your payment overall is going to look a lot better. The interest rate you're going to obtain by CalHFA is phenomenal. So there's a huge benefit of why layering your own money with these programs are really something that every consumer should consider. It is not a grant, it is a loan, but for 1% simple interest, it's really worth it. And you can pay off this loan at any time. There's no prepayment penalty. There's no shared appreciation on your equity with CalHFA. That's a big question a lot of people ask. So you don't have to worry at any time that you are ready to pay off that debt. You can do it without any prepayment penalty. Any questions on CalHFA program? So I want to show you some of the income limits for CalHFA. These are, go by county, so you can get this from their website. So if you're in LA County, it's $194,000. If you're in Orange County, $255,000 to be eligible. If you're borderline with both counties and you're making more than 194, I tell my clients, move over to Orange County right on the border and just make sure that you're following the program's eligibility. But here's some, different counties have different income limits. So just be careful and let's look at that. Now the income limits, it's where you're going to buy the property. It's not where you're currently living. Okay, so that's one of the things that people say, oh, I live here and I don't qualify because I make so much more than the income limit. It's not the income limit of where you're currently living. It's the income limit where the house is located at. Okay, so that may help a lot of our clients. If you're planning to relocate to different cities and you're exceeding the income limit, you may participate on the program. Also, the website, I'm going to just kind of log in here really quick. The website has a lot of great programs that you can visit. When you enter CalHFA, it didn't go into, I'll go back here. Let me see if I have another slide. Excuse me about that. But if you go into CalHFA's website, I will share that with you. There's a lot of great tools. There's, mortgage calculators that you can estimate. What does it look like with the program versus not having the program? What does a monthly payment comparison do? We do all of that for you, but it's a great tool for you to have. The only requirement to participate in the program is going to be you are required a home buyer's education course that it's good for 1 year. You don't have to take it now. If you do decide to participate on the down payment assistance program, we would at that point recommend for you to, start the class. All right, let's go to the next slide. So, now that we covered credit, what your credit score should be, we covered income, what type of income it's required for you to qualify for a home loan. We talk a little bit about your monthly payment, what is included in your mortgage payment, your mortgage and interest, your taxes. What does PMI mean? A lot of times our clients don't know what PMI factors in and why were you getting quoted a PMI. We also covered some of the loan programs as well. We've covered some, and we highlighted CalHFA today as a down payment assistance program, especially with the new My Access program. Once you identify what program you're eligible for, it's always important to know a little bit of what is next. How does the loan process work, right? And it's a lot of information that we're covering. So I know that we hope that you can go back and revisit this video and then learn a little bit more about and Google and search about PMI. And also different programs. Anything that you want us to look into for you, we'll be more than happy to do so. But once you know that you meet all the criteria, that you do have the 2-year job history, that you do meet the credit score, that you can possibly participate in one of the down payment assistance programs, it's also really important to know what happens next. What are those steps that you need to take to become a homeowner? And once you enter that pre-approval stage and you enter that stage where you're meeting with an agent and you're finding the right home, what does the process look like and how long does that process take? Typically in escrow, from the time that you get approved and you search for a home, that process depends, and your agent can explain a little bit more on that topic. The finding a home part varies, right? There's a lot of inventory in your area. It can be really quick that you find the right home, you negotiate the perfect contract, and you're opening escrow. If you're limited inventory, that can take a little bit more time. It also depends on your needs as a first-time buyer. You count the room counts, the area, if you need an attached or detached garage. That also can delay a little bit on the home process. And again, the realtor will explain that to you. If you are not working with a realtor, we have a great list of our preferred agents that have worked with us in the past that also understand these programs and know exactly how to work and negotiate a great contract with you. So once you're approved, then finding a home, that process, it really depends on your needs. But once you're in contract, everything can be as quickly as 28 days, or it can be as long as 45 days, depending on the seller's need to relocate. If the property is vacant, everybody wants to close fast, so we can probably be done in 28 days or less. If the property is occupied and the seller needs to relocate, which is something a little bit more common now, a lot of seniors are relocating and downsizing, then they need a little bit more time to get movers, to find the new property and schedule time for them to relocate. So that process can be about 45 days. But consult your agent to see what that looks like. If it's you can't wait and you need an escrow in 30 days, and then you want to express that in the beginning to make sure that you're finding a home that doesn't have that delay for you to get your keys. Then after you're finding a home and you go into contract, we initiate the disclosures. We are going to set up a consultation with you and go over all the terms of the loan. At that time is when we're going to lock in the interest rate. We don't lock in the interest rate on the pre-approval part. We're locking in the interest rate at the time your contract's accepted. And what determines the day that we lock in your rate? If we are looking at interest rates and we notice that there's a couple of days that are going to impact rates, in a week, which means we're forecasting some economic reports coming in that it's going to improve our interest rate. We'll float for a few days. And we'll talk to you about that in the decision of why we're floating versus locking on the day your contract's accepted. Again, we would give you an advice, but it's always up to you where you feel you're comfortable with the interest rate and you're ready to lock. But we're doing that rate lock at the time that you find your home. Then once we have the consultation, we lock in your interest rate. You're going to expect your initial disclosures. Your initial disclosures will have all the estimated fees for closing costs. And when we share the seminar presentation with you, we're also going to share a handbook. In our handbook, it's going to explain what the difference is, the breakdown on closing cost and your down payment and what that total looks like. Okay, and that way you guys can understand a little bit more about the overall cost of buying a property. Once we initiate your disclosures, our files move into with our processing team that you will be working with their team to navigate through this loan. Oh, what happened here? Excuse me about that. So you'll navigate through the processing. We order appraisals and inspections are done at that time. We wait for the appraisal to come in to make sure it's in value. Underwriting, your loan gets approved. We initiate the final approval. At that point, we may need additional conditions from you. But since we're going to have a loan application and a great consultation, we know we're going to have everything from you from the beginning. And this is the advantage when someone joins my workshop and goes through the consultation, goes through the pre-approval process, is that when you find a home, from the time that your offer is accepted to the time that we close the transaction, the process, it's really smooth and it's stress-free for you. Right? Because you already know all that stuff. You already know what to expect. You already know the conditions we're going to ask you for. If you did not join a workshop or you did not find information about what to expect, then this process can be a little bit overwhelming. So this is when we hear a lot of our consumers, their experience. Some have great experience. Some have the worst experience with the loan process. Where we find our clients having the best experience is when they have joined our workshops. We see it in the paperwork that they turn in. We see it with the flow. We have everything from the beginning. So then when the process starts, everything is smooth. And this is why we're here to help you to, once you find your home, we want to take you all the way to the finish line and make sure that it's a stress-free process for you. Okay. Once everything is done, you are going to receive a call from escrow on your closing date to sign loan documents that will be with a notary. They'll either come out to you or you go to an escrow company, and then we wait for funding. My processing team lets me know that your transaction has closed. And that is when I love to make that call, letting you know, congratulations, you're an official homeowner. And now you're stuck with me for the next 30 years until you refinance your mortgage. We are always going to make sure that we position your mortgage to better terms. So the moment the interest rates drop, we will give you a call. So we will always monitor for you. So our services doesn't stop the time that you close with us. Our services will continue. We hope that, you share your experience with us, with family and friends. So that, this year I broke a milestone in my career. I actually financed one of my first clients back in 2001. I did the financing for their son this year. So that was a great milestone for me in my career, that now I'm financing my clients' kids into their home, which was great, right? So the whole meaning about having your mortgage lender for life, my client, really, it was a big reflection for me. So I was really honored to be part of that experience with them, and happy to be here and be able to serve as many clients as long as I have. So once you get to the finish line, I promise you that we will continue to stay in touch. And I will give you a call to congratulate you personally on the big accomplishment, and any questions that you have afterwards will follow up, because once you become a homeowner, you continue to receive a lot of information that you're probably not familiar with, and you can always call back and let us know, is this stuff something I should be looking into? Is this something I should be aware of? Same thing with insurance policies. We're sending notifications to you, letting you know, your insurance is ready to expire. We try to stay in contact with our insurance agents to make sure that they're also contacting you if any changes happens with your insurance. Any questions on the loan process? Okay. I do have a question. Are there any loans to construct an ADU? The answer is yes. We have a renovation mortgages that allow you to build an ADU. So the way that works is that we're going to look at future value and give you the funding to build that ADU. Okay. Now, those programs, the renovation programs, it really depends on your credit score, what type of program we're going to put you into. But you're actually, if it's detached or attached, depending on the property, we will give you the fundings to build an ADU. And I will share with you, if you want to share your email, I think I have your information. I'll send you a handbook on the renovation programs. Okay, so what is next? Now that you've listened to about 35 to 40 minutes of a lot of information, one of the big takeaways that I tell my clients all the time with these webinars is that there's assistance programs for you out there as a first-time buyer, right? To really look into what options you have as a first-time buyer when it comes to owning a home. Questions like, can I have access to money to build an ADU? Can I buy a duplex? And can I remodel them with any type of loans? The answer is yes. So there are a lot of options, and there's different types of properties that are fitting into different families. Maybe a single family is not for you. It's a condo, it's a townhome, it's a manufacturer, whatever that situation is. I always recommend my clients to schedule a phone call with us and let us know about your goals. Let us know if you're ready to buy now, if you're ready to buy next year, because we want to know where you're at so we can put you in our ecosystem. And once you're there, we're going to give you information on what's new, right? There's a lot of new programs that are popping in. We hope that we see more in 2025. Every city always has additional funding. And if we see the word grant, that's free money, we want to combine with any of these programs. I will be talking about the Green Line grant program in our webinar in the month of May. And the reason why I chose May, because the program doesn't reopen again until June. They just closed out the March 31st application. So stay tuned for that program. If you're in LA County and you want to participate for that program, stay tuned. Just continue to visit our website, open up our newsletters. We will make an announcement on upcoming grants. But schedule a phone call with us, right? We will go through the pre-approval consultation with you. We will learn about your goals of homeownership and guide you the right direction. We don't charge for our credit reports. It's a free credit check and it's a soft pull, so it's not going to impact your credit. If you just want an over-the-phone conversation of where you're going to be at with your income, we can definitely schedule that with you. On our website, we have our link to our calendar. This is a live calendar every day. My team is updating it. Feel free to chime in there at any time. And if some of those hours don't work for you and, because you work on weekends or you have a night shift, I will make sure that I put you on my calendar, because for me, it's really important that we communicate with you. And I know that sometimes these dates don't work. We work very flexible. Let us know how we can help you. We have a very easy process. You can download our mobile app, or you can visit our website and start your application and uploading your documents. Once you upload your documents, we receive a notification. My assistant will call you and let you know if any documents are missing, or if you have any questions regarding the process. And they set up a consultation with you. I do all my consultations one-on-one. No one else in my team is doing the consultation. So once I receive your paperwork, I'll get on the phone with you and we'll go through the process again. Okay. Let me see. I do have another question here. Let me see. Oh, I think we already dismissed this one. Okay. Any other questions about any of the information that we covered? No. All right. Well, I want to thank everyone for joining today's webinar. There's a lot of great information for first-time buyers. If this is your second time that you're buying a home and you want to, get some programs, and find out more information, feel free just to contact us. Look out for new dates that we're going to be announcing for different programs. We do change our webinars on a monthly basis. This is a first-time buyer workshop. We do host renovation programs, and we then focus on how to fill out your applications for grant programs as well. So if you're interested in any future events, just continue to follow us. We're on Instagram, on YouTube, Facebook, and if you're already in our ecosystem, I am sure you're receiving our newsletters. Well, thank you everyone for joining us. Any questions before we disconnect here? All right. Well, thank you guys for joining us, and go ahead and schedule your consultation with us. We look forward to helping you and acquiring your first home. Bye-bye.